This was a good earnings report. I'm still very bullish. I don't think this was what we were expecting. The revenue was precisely what we were expecting. However, the expenses and the EPS was very unexpected, and that is why everybody's freaking out today. That is why we hit 550 in the pre-market, and that is why we're down 2% in the pre-market right now. This was a good earnings report overall, and the reason why is because people are overreacting on the expense side. I want to talk about later after we go over we're going to do a brief summary of the earnings this video, and then I'm going to go over what this channel, there are going to be some changes with the channel, I think, so I'm going to talk about those later. But earnings per share, to understand why this is an overreaction and why, in my opinion, yes, why we should be green after an earnings report like this, okay? You have to understand how the actual earnings per share is calculated, okay? So it's a measure of profitability. Basically, the reason why it was such a miss is because there was high expenses, okay? If we go down here, this right here, you guys also have to understand that with a growing company, you have to grow, and by growing, you have to do something to expand your business. In this case, we're hiring people. Actually, we're hiring precisely 37 people on the quarter. And guess what? The CFO says it's going to continue at that pace. That's an amazing sign for a growing and healthy company that is doing good things. And maybe if they're publicly traded, maybe they should be going up in price because their business is just getting bigger and bigger. Of course, that doesn't necessarily mean for sure it should be going higher. Doesn't mean the value is going higher, but that's a good indicator for it, right? You want to see more employees being hired. We had 37 more in the quarter. That's going to continue, but not quite at that pace. You can see right here, there were 17.9 million operating expenses compared to 12.2 million in the last quarter, right? They explain about 5 million of this due to headcount and related expenses, right? And then 1.4 million is the 2021 employee equity thing. Okay, that's the stock options that were granted a while ago. Those are the incentivizing stock options. So there you go. 5 million of this about 6 million increase was because of employees being hired, so business expansion, and then incentivizing those employees. There you have it. Everybody's freaking out because we didn't match on EPS or beat EPS. However, the revenue, which is the most important thing, do not get it twisted. When you look at this report, the number one thing that you want to know about is revenue, and I'll tell you why right now. Imagine if the EPS was green, was a beat, but the revenue was a big miss. No, we would not be doing as well as we would now. It's because we want to see, with a company at this stage, with Bionano Genomics, a high growth company that doesn't really have a lot of people. At least I don't consider this to be true, but a lot of people consider, and this is the main problem with BNGO, we don't know if they're going to get a lot of sales. That's the most important thing in these earnings report. How many sales are they getting? Are they actually bringing in money? Because right now, that future growth is priced in. If they don't have that future growth, actually, if that doesn't actually effectuate, that price is going way down. And what we saw this quarter was a $400,000 revenue beat. That is significant. I don't care if it's not, that's almost $500,000 when you're talking about 3.5 million is the consensus. I would consider that a very significant revenue beat. I don't know if it's like kick-ass revenue beat, right? It's close. It's definitely more than a small revenue beat. It's a significant revenue beat that we got. And also look at this. This is beautiful as well. The gross margin increased. Our gross margins were 37% instead of 33%. That's an amazing sign. And also, guess what? They expect that to continue. Gross margins are expected to increase because of larger consumable revenue. And this is a quote by the CFO, if I remember correctly, or one of the two, CFO or CEO. Modest growth in the gross margin department. That's amazing. Okay, that is the type of comment that makes you bullish and makes you believe that we're going to be profitable in one of these 2 years, 2023 or 2024. The price, you know where it will go if we're profitable by then. You know where it will go, okay? This earnings report, by and large, it helped. It wasn't fantastic. It wasn't what I wanted, but I wish they were more optimistic on how many sapphires they were going to sell. I wish they just gave us a number like, okay, we're going to get 500 sapphires installed 2 years from now or 10,000 by 7 years from now. That would be amazing. They didn't do that, and I understand it's very hard to project that. However, this is still a good earnings report, although they didn't give us one of those comments. This is still good. Your gross margins increased. You got a huge business expansion, and that's the reason for the expenses. So I'm not worried about the expenses or the EPS miss at all, okay? You have to, we still have, listen to me. If you're worried about how our cash burn rate or our cash runway, listen to me right now. We still have like 5 years of cash runway. We probably have more than that, because when it comes to cash runway, yes, right, if we were to not, hypothetically, this is a dumb thing that everybody does. Hypothetically, if we were to not make any money and we were just to lose, continue losing the exact amount of money that we're losing right now, which is about 40 million a year, a little under 40 million a year, yes, we're going to have a cash runway about for, less than 5 years. But if we're actually going to do what we will, guaranteed, essentially, everybody, including the analysts, the dumbass analysts, Simply Wall Street, even them, everybody is projecting that net profit to get higher. Right, they're going to be, right now we're in a big loss. We're expecting that loss to be mitigated, and then we're expecting to go profitable. Right, so in other words, we're losing less money each year until we're profitable in like 2023 or 2024. So that is why the cash runway is basically, unless they just start burning like 50 million a year, which no one is expecting, or 60 million or something crazy, this is nothing to worry about. So that you combine that reason, the cash reason, the cash on hand, and the cash runway thing that I just explained. Please understand that and rewind that if you don't. That's a very important point. Also, what is the second point that I explained earlier, which was why revenue is more important than expenses to begin with. You understand those two things, and you understand why this is a good earnings report. 226% year-over-year growth. How many companies can say they're getting 226% year-over-year growth in the revenue? Not many. You want to ask why Bionano is trading at high PE? One of the biggest reasons is because we're pulling numbers like this. And this is expected, not that number is not expected to continue. That'd be amazing. We'd be at $100 a lot sooner if we continued at that. But we're expecting a big number to stay, right? Double-digit substantial revenue growth every single quarter. That's pretty much what we're expecting. And look, all 2021 milestones are on track. There's a ton of great things in here, okay? They talked about the total addressable market. He gave us some more bullish comments on how big their actual market is. 4 to 5 million samples in cytogenetic labs annually, 2 to 4 billion annually. We see without some applications included with the Sapphire. That's how much they can get in revenue, right? 10 sites have already got reimbursement. They talked about the CLI lab being underway. That was amazing. I love to see that they're doing that. See, stuff like this is what they're using that money for. Operating expenses increased. They're doing a lot of things. They're hiring people. They had to do the incentivizing stock options. They're also getting the CLI lab, clinical laboratory improved amendment laboratory. They're getting that underway. They're working on the laboratory developed test pathway. They're making laboratory developed tests, getting the PLA codes ready. Those are becoming effective October 1st. And then the reimbursements. This is a path to getting that third-party reimbursement, and also getting getting away with not having FDA approval, finding a loophole through the FDA for the FDA approval paradox and dilemma, right? That's what we're doing, and that's exactly what you want to see, man. 49 publications on Q2. That's the highest that we've ever had in history, right? We got into one of the largest diagnostic institutions. We already have 10 of them with reimbursements. 10 sites have reimbursements. One of them is one of the largest diagnostic institutions in the world. We're making steps to getting in the diagnostic realm, and once that happens, these sales are out the fucking roof. I'm sorry, that's the only way I can say it. Simple as it gets. Simple as it gets. All right, there's different sample types. They talked about that maybe happening. They updated their software. Okay, and that's pretty much most of the very important things I would say. They said they expect continued momentum in regards to revenue, and then they said for the revenue they also expect it to be in line for quarters for the rest of the year. So I don't really expect, and this is actually the reason why, and this brings me to my next point, kind of. This is why we're not actually gonna. This is one reason why we're not actually gonna be covering Bionano as much as we usually do. We will probably continue to it at one point or another, but for now, I think I'm gonna take a little bit of a break from covering it like every single day, and it's for two reasons. Number one, I could use a break. I don't want to see and this is my fault. This isn't your guys' fault. I love the community is amazing. The expectations of Bionano, that is pretty much. The expectations that some people have, that's probably one reason in and of itself. The other reason is because there's not expected to be crazy stuff happening for a while, and this quote sums it up perfectly. They expect revenue to be inline quarters. They expect inline quarters for the rest of the year. They expect 15 to 16, maybe 18 million for the year. And I don't know if we're going to go. I don't know what my end of year price target is on this. I need to reflect some more and think more deeply about this, about what we just got here. I've had a lot of time to process this already. I've read this a couple times. I've read all the important points multiple times. But end of year price target is still hard to say. I still think $10 is pretty. I still think $10 is going to happen. 15 and 20, they do seem a little bit less likely, just because I was expecting the price and other investors, to react more positively to this news. If they don't react positively to this news, and if they don't understand that earnings per share is not as important as revenue in this stage of the company and in this scenario, not at all. I don't know what they're going to do if we continue to get huge kick-ass revenue numbers and continue to get a little bit lower or higher EPS, higher in the negative, lower in terms of closer to profitability, right? We're getting farther away from profitability. But that's expected, right? If you look at Simply Wall Street here, let me pull this up. Actually, I'm just going to look up Chartmill here. If you look at Chartmill, they're actually expecting the EPS to go down, right? They're expecting this to go slightly down, as in less profitable, okay, or higher, depending on how you look at it, right? But look right here. Here you go. Your future, we're going down 20 cents a share for that year, and then 90. Okay, the EPS is barely changing, right? For 2022, the EPS is 22 cents in the hole. For 2021, the estimate is 19 cents. That's getting worse. Okay, we're expecting the EPS to not necessarily skyrocket. We are expecting the revenue to skyrocket, and that's what everybody cares about. Or at least that's what I care about, and that's what everyone did care about until we got a little bit of extra expenses because we hired 37 people and had to pay a couple incentivizing stock options. So with that being said, also I want to point out that the nano channels that we sold, the flow cells that we sold, that is more than last quarter, and those are one of the key components for the consumables. So the consumable revenue increased this quarter. We got 13 new shipments, and everything looks good. Nothing looks super unexpected. And again, this is kind of, everything looks like it's going as expected, basically, which is boring, but it's also good, but it's also bad, right? Because the price is going down. It gives you more confidence long term. It's a revenue beat. It's a $500,000 revenue beat almost. It's good. It's definitely good. But this gives you confidence as a long-term hodler, though. They're doing good things. I think they're working their asses off, man. Based on what they said in the earnings report, it seemed like they really worked their ass off last quarter, and it seemed like they really have a good cause. They really do. They want to prove that what they've done, their product, is and does deserve a legit niche, and they've proven it time and time again. And it's just a matter of time until they continue getting more sales and marketing. And once that stuff happens, the institutions start adopting it. Domino effect. Once one big boy does it, the peers follow, and it just continues. Because once one of them realizes that it's better than everything else in the world, and they're literally losing money if they don't have it, why wouldn't they tell their peers? They're gonna word of mouth, like they said in the earnings call. Word of mouth is huge. Okay, and I've already ranted enough. Okay, the earnings call was good overall. It was good, and you should feel more confident as a long-term investor. You got to decide what you're gonna do with your investment, because it's not going to necessarily be as exciting, I don't think, for Bionano the next few months or weeks at least, because of a very mediocre-ish, and that's how most people are taking it. It's a mediocre earnings report. That's how most people are taking it, man. And you can see that with the price in the pre-market right now. Most of high growth is actually up pre-market, and Bionano, you can see we're down 2.5%. Okay, people do not like this earnings report. It's mediocre, and they didn't see anything or any reason why it should go up. I'd say that's stupidity. I wouldn't be surprised if we close green today. We should be closing green because this is a good earnings report. So, and you may say, well, Brandon, earnings reports that are good don't affect the stock. Well, our last two did, and don't tell me the trend of that happening didn't start. It started like at the start of the year, right? That's been happening this entire year, not just now. It didn't start just now, so don't give me that. And anyways, with that being said, for the streams and the quantity, I don't know. I'll probably continue doing one video a day on Bionano. We'll do a stream every once in a while, but I don't know. I don't feel like I think we need a break, and I don't think there's much reason. You guys tell me if you want me to stream every day. Maybe I will, if people actually want me to continue streaming, because I think the price action, to be honest with you, I think the price action is going to be boring. I think it's going to be even more boring than it usually is, because we got the earnings report. Basically what it does is solidifies that we have value. However, it prevents us from going super high, at least until people understand. I think this earnings report gives us a higher floor and a higher ceiling. However, no one else does. Everyone else is thinking, no, It's not that good. It's mediocre, and it's, you can see what's going on. We're down. There you go. We're down 3% pre-market. We'll see how we close the day. Okay. I'm adding shares and holding shares. I'm holding all my shares. And let me show you the portfolio. All right. There we go. It's I'm holding 2,000 shares. I'm not selling a single share. There you go. You can see my filled orders. Did not sell one share. I'm not selling one share. If the market crashes, good. I actually hope it does, because UVSY will skyrocket. I'll throw those profits right back into BNGO. My plan is the same. We'll continue. Guys, we'll do some more streams. We'll do streams, and we'll do more volume for Bionano. But right now we're gonna take a quick break. I would say probably. We'll still do a video every day if we decide to decrease the stream quantity for as the new normal. And anyways, with that being said, so ape language, what you should take from this video is that Brandon is going to make less videos on BNGO, but he's still going to make probably a video every day. So he's still with us. I'm still with you guys. Do not get it twisted. I'm still in the community. I'm still a part of the community. We're still going to do streams every once in a while. Maybe whenever there's interesting price action, like whenever we're free falling, like literally going way down or going way up, or when there's news, we'll do something. But and the earnings report. So that's your first takeaway. And your other takeaway is that the earnings report was good overall. At least that's my opinion. That's from my perspective. Many of the truths we cling to depend on our point of view, of course. But from my point of view, this is clearly good. And this makes me feel more confident about these numbers. It makes me feel more confident about profitability coming in a few years and $1 billion in profit coming in 2030 alone. And with that being said, thank you so much. This is not financial advice. I will see y'all in the next one.